Hello, everyone. Welcome. So I just had an alert here on gold, and I'm like super busy trying to understand what I'm going to do with this setup. I hope you're all having a fantastic Tuesday, and I hope yesterday was an insanely profitable day for everyone. Victor, you probably bagged a couple of R yesterday, didn't you?
I did. Hi everyone.
Of
Yes, I
course you
did.
did.
I had a well. I don't win every day, but I
When
had
you win,
three.
you win very big. That's right.
That is what I'm known for, but that's not my typical day. I Yesterday, since it was a very it was a bank holiday, I knew that I wasn't going to hit that those home runs. So it was just the FTA, and I got I think I got something like 6R with a with a drawdown of 3R in the process. So it's a decent day for me. It's actually a nice day, but not a home run. But nonetheless, I'm happy. How is everyone doing, by the way? I see we have a lot of people in the chat. I like that a lot. We have people from Nigeria, from the Netherlands, from Nepal.
Yes, very nice.
Welcome, everyone. We glad you all are here.
So I've just entered this position on gold. I've just market enter right here. I'm in currently in a small $15 profits right here. Can buy me a nice expensive cup of coffee. $20 in profit. That's a pizza. That's a nice pizza. Oh, I'm not in profit anymore. The swings of trading. It goes up and it goes down. This one, however, seems like it wants to just shoot up. I just got back from a run, 5K run. That was
Nice.
exhausting.
How does it make you feel mentally after you run? I
Dude,
mean, the
that's such a
day,
good question.
the
I
hours
wanted
after
to
you run.
yeah, like I wanted to talk about that actually. Like, so for me, I feel like physical exercise is medicine, right? It's medicine. It's not medicine. It's like it's better than medicine. It's like it's what keeps me sane. It's gonna sound weird, but now obviously we don't have voices in our head, but all the thoughts, all the questions and all the thoughts that we have from a day-to-day basis, all the maybe anxiety and stress and those kinds of things. Like when I'm out on the run, it's like they just disappear. It's like they're just gone, and you come home and you're like in a state of bliss where it's like just complete calmness and you can focus, and it's such a nice feeling. And that type of feeling, that's what comes from long-term exercise, right? And
Yes.
it doesn't have to be like super advanced hardcore exercise. It's just about moving around. If you just move around like 1 hour or two every day and just increase that heart rate, it's oh man, it's going to help you. And in trading, like for me, it's I believe it's one of my edge. Like I always say, like from a technical point of view, I'm the most simplest trader. I look at support, I see price hitting support, I buy. Like that's very simple. But when it comes like my mental edge, that's where my edge is. It's for me, it's super important. And
Yeah, it actually is medicine. For example, in clinical depression, it's been proven it's a viable therapy to use exercise. Exercise will release neurotransmitters or substances in your mind, in your brain, that will help you with symptoms. So actually, it is medicine. We like to
yeah,
think it is maybe for muscle building. No, it's actually good for your body, and it clears your mind. It's so important to exercise, not only for your trading, but I mean for your health in general.
yeah,
One of the Being sedentary is one of the risk. It's the new smoking, right? Being
yeah.
sedentary is risky for your longevity.
Yeah, I've I've read studies that say that so from a, like I said, they've done a lot of research when it comes to the they've compared antidepressant with regular exercise, and studies have shown that regular exercise has, if not as much of an effect as antidepressant in a lot of people, but even in some people, better effect. Now, of course, if like I'm not a doctor, I'm not a physician, so obviously not medical advice here. But what I'm saying is like the studies show that the best effect usually comes from like a mix of medication and physical exercise. And also like both of my kids have ADHD and I have ADD myself, so I've studied it quite a lot. And like for me, this is my medicine. Like when I'm running, when I'm moving around, when I'm doing physical exercise, that's when I'm calm, that's when I can focus. And as a trader, we have to take care of us of ourselves. We're our own bosses. We have full responsibility of everything we do in the markets, and it's also our responsibility to make sure that our working environment is positive. Just like with the regular, in a regular company, you have the CEO and the boss, and your closest boss has the responsibility of making sure that your working environment is good. But in trading, you're your own boss, so you have to take care of that yourself.
That is
Uh,
true. It is true in trading. We need to monitor not only our risk, our equity curve, our emotions, but also, as you said, our mental healthness, our
yeah.
physical healthness. And those are equally important, because when you don't have them, they will. You have just one body, so you will be affected. The results you get will be affected if you're not able to focus as well, if you're not able to go through a backtesting session. Because if you can't focus, I mean, you're not going to be able to do backtesting, if or trading in general. So it's being a one-man show, and most of the traders are one show. I mean, the retail trader is by definition a one-man show. So it's very important, and there's no one else there to help you, give you a nudge when you're not checking upon that. So you have to have a checklist, perhaps every day. I did I sleep well? Did I exercise today? Do I have my mind clear? Or maybe if you don't, go for a walk, right? Those
Yeah.
interventions are not popular, because I mean, what does a walk do to your edge or your profitability, you might think, but it will have a good I mean, walking is a good exercise because it's something everyone can do, right? Like running and jogging, you got to have a good motor skills. I mean, good general condition to be able to jog. Not everyone can jog, but walking, most, if not everyone, almost can walk. So that's something. And walking can, as soon as it raises your heart rate, that already can help you, that circulation, and help you clear your mind. And as you walk, you can go through the things, your day, your life, the issues you handle. And it can be very, very therapeutic, while being good for your physical health as well. So it's the emphasis on exercise and taking care of your body is cannot be stressed enough.
Yeah. So I got to tell you. So right before the uh, right before the live
What
stream,
is
I
it?
had
We want
a
to know. What is it? You made us
yeah,
curious now.
yeah. So right before the live stream, I had a phone call, and that's why we were a couple of seconds late. And it was my fiance. She called me. Oh man, we can make so many jokes about this. But we're not going to because we're professional. She called me, and she's like, "I'm in a parking garage, and I can't get out." I'm like, "Well, I'm going live in 10 seconds. I can't help you." But what? I'm gonna pick up our son. I'm stuck in a parking garage. I'm like, oh, I don't know. Like, call his grandma and I guess you're gonna be there for a while. Yeah, that's interesting. Interesting scenario. I wonder how how she's doing. I'm gonna send her a message. Friends,
Not
she's
long ago, my brother was parked in an underground parking, and you need the car that he was using. You need to have internet connection in order to turn the car on. So of course, when he went into the garage, he had the car was running, but as he turned it off, he was not able to turn it back on because he didn't have internet reception. So he needed to go upstairs, get internet connection, and run back. It's yeah, those kind of things you don't think, but they happen in real life. uh
yeah.
Make you think things through before you do them.
Yeah, let's see. Well, I'm hoping. Yeah, I'm just in the background here doing sending some messages here, making sure that my kid is not stuck at daycare. Um, yeah, I it's in what a situation. Anyway, so I'm currently in a long on gold. I think I caught this move very nicely right here. Let me very happy about that. Very happy about this move right here. That is, I mean, an entry like that, you don't get an entry like that. This entries like this does not come along very often. Look at that. That is a beauty right there. Let me
You're still
break
holding?
down what.
You're still holding
Oh yeah, I'm holding this till yeah, this is almost a 5 hour trade,
till the
and
end of days?
I'll yeah, it's gonna, this is gonna take a while. This is kind of like
Okay, okay.
and this is the type of trade where,
What
yeah,
is your
actually let's
target
break it down. So
to be
this is
exactly?
a type of trade where, this is a type of trade where I'm, let's see, where I am basically looking at the I'm looking at the high time frames. So I'm looking at a swing setup, but in this case I saw a very good intraday or scalpish entry on this swing trade. So the first idea, and this is based on a weekend plan. So you see the price comes down. So this is Friday. So we were trading on the weekend. We were trading here. So I basically looked at this on Sunday and said, where what is the most probable direction? Is it up or down? Well, prices at support in an overall uptrend. I would say that the likelihood of price going down is lower than going up. So I'm betting on a bounce. Okay.
Mhm.
So my initial idea was look for look for longs around this area for a move up to the FTA, and I believe this would be the FTA. And then price action kind of started developing in a nice way. We had that daily bullish engulfing candle. We had the bounce inside the reload zone. We're above the 0.618. And now today, when zooming in, I saw on the 4 hour that we have sort of a double bottom, and we have, if you guys been following here for a while, you know that I like to use the reload zone as my area of interest for either buying or selling. And if I see a double bottom inside the reload zone, that is a very high probability trade for me. And when I see a double bottom where the left, I don't know if this is an actual pattern, maybe it is, but the left leg of the W or the double bottom is supposed to be higher than the right one is supposed to be higher than the left one. So we have this pattern. And also it's best if this bounce here happens in the reload zone of that move. Let me explain what that means. And then we have that move. So we can add kind of like do some fib inception here where we fib this move. Okay, so we're inside the high time frame reload zone and we fib this move. The bounce or the right leg of the W is inside that reload zone. Okay. And then I want to see a break and retest of the 0.618 of the higher time frame fib. And this all happens after printing a daily bullish engulfing candle. Or maybe this is an outside bar. No, it's not an outside bar. Um, And then you can fib this move from that low to that high. And that retest is not only on the 0.618 of the high time frame fib, it's also on the 0.618 of the local fib or the lower time frame fib. And that's where I find that uh, fib confluence, if you will. And then you have a very good, in my opinion, high probability trade where you have a low time frame entry, where this is on the 1 hour, where you have a trend and you have that good, nice break and retest of that horizontal level right here, which is also is reload zones all over the place. And now that's my entry. Okay. Tight entry, tight stop loss because the move has already happened and the retest and the bounce has already happened. And now we zoom out because the target for this move is, of course, going to be the same target or a similar target as the original swing trade, which is going to be all the way up here. But honestly, that's a 7.4 hour trade. The probability of that hitting is very low. I think for me, it's much better to choose that area. I'm still going to get almost 5R. And to me, this looks like a much more probable area for a rejection. But on the bigger picture, I think this looks good for a move higher. So that's basically the gold trade broken down.
Very nice, very nice. I like those high risk reward ratio. Although I, of course, I start from a lower time frame, but I like them because once you get them, and they start, well, at least in my case, and I think yours as well. Once you get in, usually you're right away, and as soon as it starts running, it's easy cruising usually, because it will tell you right away that you got into the right wave, and it just, even though if it does it grindingly going higher, it keeps on doing the same thing because you are on a bigger picture, on a bigger time frame. You are in a bigger trend, and I like those a lot because it's once you get, the thing is difficult, the difficult part is to identify them and get in at the right spot. But once you get that, you got confirmations from how it performs usually, and it makes it very easy cruising, in my opinion. So I like that, and that's what you can see as well, right? You got in.
Yeah.
How long did it take before it starts going to your direction? I mean,
Yeah, just a couple of minutes.
a couple of minutes, right? And what is the time frame you got in?
I think based on like that, yeah, I guess the 1 hour 15 minutes, something like that. I
15.
guess
Okay, so 1 bar, 2 bars. It took less than 2 bars to confirm and keeps on start moving in the correct direction. So that's what I mean. We it's much more comfortable to hold that, and than something that you enter and it just goes sideways for a long
Yeah.
period, and you might still be right, but before you see that, it takes a long time. So, and it makes it very difficult for you to hold on to that.
I'm gonna save. I'm gonna save this
Sam
one. So
here, yeah, Sam here is is right on the spot with his comment. Please do like the video, this YouTube session. The more likes we have, the more accounts we will have for the giveaway. So it's better for you, and the more likes and the more often, automatically YouTube's algorithm will cause that we will have more. It will be shown as a suggestion to more people, and more people can get in to this knowledge and sessions. If you like it, probably other people will like it as well. I mean, and not in clicking the button liking, but I mean actually the meaning of liking. You get value out of these sessions. Probably other people will be having that same experience. So hit that like, and let's have more people enjoying the same content.
I'm gonna be adding some links to the trade the pool event that we got on June the 3rd at 7 a.m. It's an 8 hour long live stream. It's it's gonna be quite Quite good stuff. Now, Trader Pool is obviously they do stock trading. It's kind of like the Fivers, but for stock trading. And but this event is not only for equity traders or stock traders. You could definitely join this event and level up your forex trading. Forex trading game as well. I'm trying to find the link that you can use to kind of go sign up to that one. So let me see if I can find that. Victor, do you have any trade that you're looking at? I'm very. It's not every day you get a trade like this. This I
No, I
like
don't
this.
have. You mean the gold one? Yeah, I don't have. I don't have a trade I'm looking for. I'm still looking for those structures. Since I'm selective, I'm waiting for those structures to let me know what it wants to do. What I do have is we are getting in a very interesting area, and I can show this on the daily. Let me show that on the daily. I will show my screen. We are currently in this is the quasi that I typically use, right? This is the quasi that I always use, right? We have a move up that forms, and before that we already have a higher high and a higher low, so we have the prerequisite to look for that reversal pattern. And that would be the head, right, and the break of the neckline. It goes even deeper, and now we are getting into a very interesting area where you have order blocks on the daily. That is, we're right in there, and the question is, will we get a rejection of this area? This is on the daily, so that rejection we will not get today, the or maybe today at the end of the day, but probably will take a few days before we see that. But once we do get that rejection, if we do, right, we don't know that. If we do, then we can expect a bigger move out of this bigger structure, a bigger move to structures much lower, perhaps this one or even lower, right? So that could be something to be looking for in the coming days if we get that rejection from this right shoulder, right? Because it's not every quasi will be a reversal. Some will just be, not work, and they continue to go, and we don't want to be part of that, right? So if we get that on the daily, then we can go on the lower time frames, on the 4 hour, the hourly, and try to catch a piece from this move, either to this structure or to the other structure below us, right? That's something that I'm looking for, but it's not. That's on the higher time frames. On the lower time frames, on GU, we have been having, as we are getting into this supply zone, right, that daily entry order block that I showed on the daily time frame. We are only, it doesn't seem to be wanting to reverse, right? This is just bullish, and is very bullish. The retracements are very minimal. So the structures, it does leave some structure, some bearish structures. I'm eager to see if it will come back to either this, and then I can get a move out of it, or maybe a little lower and a move out of it. So I'm trying to catch the same, continue on the same direction, right? But waiting for that retrace until I target something like that. It might come back to that order block, and by that I mean this order block. And then if I get a rejection on the lower time frames as well, and then I will target either the high or some other structure depending on the time of the day, etc. That's something that I'm looking. But as of now, it is not doing that. The retracements are not being retested, so it's not offering me that entry that I need for my entries. But you can see that, right? I see that all the time. How when it comes to a higher time frame order block, this is a daily. Look, that wick, it's not coincidental that it happens there. That's the order block at work. I mean, I've been seeing this for years, and it still amazes me. Each time it gets to that order block, and this order block has been there for days on end. I mean, when was this first formed? It was a long time ago. This was in on the 14th of March, so over a month ago. we already had this structure, and as the market comes into it, look at how it reacts to it. I know it's a little reaction, and that's what it is. Yes, so far it's only a little reaction, but this is what I trade. I trade the reaction of price when it gets to an order block. It's and it's so obvious. I mean, I didn't plan to show this. I just see it, and it's that this selling pressure is because of this order block, right? That order block that is there, this whole area that we have above us. Even if it's on a higher time frame, that's how order blocks work. They the market listens to them and reacts to them, not all the time, and this doesn't mean that it will go straight down, but you will get some kind of reaction, and that's already enough to be, to make a profitable system around that, because you don't have to predict the whole move, just a reaction from it. That's what I'm looking on GU. On EU is quite similar. We also have some order block we are currently in, and price is having difficulty. I mean, the order block is having difficulty to contain price. So it looks very bullish. If you look at it's forming bullish order block, and it hasn't stopped doing that on this is on the H4. It's only forming bullish order block, and we'll have to see in about 30 minutes if it forms another one, right? If it does that, it keeps on forming or bullish order block. To me, that's a sign that the chance of price going much higher and breaking these structures becomes larger, because that's the narrative. If it is going to reverse here, it shouldn't be making bullish structures. It should be starting to decelerate and then starting forming bullish and bearish structures, and at a certain moment start breaking those bullish structures, right? There's a pattern in the structures it forms. And by structures I mean order blocks, and at that pattern you can read what the intention of the market is, right? And it's not, well, now we have this wick. It's 30 minutes on the 4 hours, so we'll have to see how this finishes. This could be, it doesn't say anything yet, but this could be a beginning of that deceleration that I just mentioned. But we'll have to see. But as of now, I don't have anything. I would be doing the same thing for the EU, waiting for it to retrace into some demand area for me to catch that continuation move, or maybe if it does a bearish structure, a new one that we don't see yet. In the future, in the coming hours, I would be then switch to sell, but that's not the case yet. So those are the two. Basically, I have to sit on my hands when and not get impatient when the market is forming. It's not constantly that we can force the market to have opportunities. Actually, we can't do the market anything. We just follow, read, and grab those opportunities when and if they come. And if they don't, we sit back, we do other productive things in the meantime.
Did you say that you had something you wanted to go through in the Discord?
Yes, actually, that's a good. Let me get it. We have, for those who don't know, we have in the Discord room, we have a submission. Let me get this out of the way like that. We have a submission section, right? If you're not part of the Discord group yet, you're missing out. Let me tell you, you're missing out, because we have so many people being getting so good value trading advice or experience shared, tips, tricks, and they're telling us how much value. It's not we saying this; they are telling us that we're getting good reviews on how good reception of what we're sharing there. So if you're not part of the Discord, make sure you become a member of our Discord community. The only thing you need to have is an account with us, with the 5ers, and in your dashboard on the right upper corner there will be a little icon, the Discord icon. If you click on that, it will give you that invitation link. It is the invitational link, and it will bring you to Discord, right? And inside we have different sections where you can mingle with other traders. and it's a great place to, you know, grow as a trader in general. We have, by the way, we also have daily sessions where we go through the market strategies, psychology, and so on. But within that, the Discord, we have a section where we have you can submit your questions, your setups, or whatever questions you may have about trading, and we do our best to answer them. And this is one of those questions. This is the next one. This one is directed to me, so I will take the liberty to answer this one. Says, I went over yesterday's live video about your order blocks strategy. Thank you for teaching it so well. I do have a few inquiries about your strategy and hope to get some clarification. The first one is, uh, from what I understand, price tends to react when it reaches order blocks. So if there is a swing from high to a low price, and there is an order block at the high, we can anticipate that the price returns to that order block. There's a high possibility that it will be rejected, which is what I aim for as an entry. However, what if price forms several order blocks along its drop from the high? Which order blocks should or would you consider valid in this case? Would you still prioritize the highest order block? Okay, so basically what our good friend MCD is asking, if price is, let's say, let me get a good move. For example, we have, uh, let me get a good indication. Okay, so we have this order block, right? This is the first one. And we have, this is on the monthly, so these are monthly order blocks, and it's forming multiple order blocks as it's going in one direction. That's the first question. Which one should we look for, and which one should we prioritize and choose to enter? Because the idea is, once it forms an order block, as it goes down, it tends to come back, and that's where we look for the entry for that continuation, right? So so that's the first question. And so which order block should we consider valid? The validity of an order block is personal. And I say this because you could trade all of them. The order blocks are a price where the market has shown us in the past, right? Each one of these, that the market, the participants are willing to buy or sell. In this case, sell from this area. So you could trade it, each one of them, right? Of course, they're not equal, right? So it depends if you have other structures, like I use quasi as well as order blocks. If you use quasi as well, then I would be looking for the quasi to tell me which order blocks are best. For example, in this case, if you have a quasi, let's say you have, let me get this, you have a quasi, right? And in this time, I'm combining it with a, this is not a valid quasi according to my rules, but let's assume it is, just for illustration purposes, right? So let's say this is the left shoulder, and this is the head, and the price moves away from it, breaking that neckline and comes back. Which one should we be using? Should we be using this one, that one, or the upper one? And you could use all of them, right? But you will have to look in your data, right? Do your back testing and to see which one are more likely to be reacted on. I know from experience, right, that if you draw a retracement tool, right, the fib as a retracement tool, that the ones that are above 50% tend to be better at holding price, right? So I wouldn't take anything below that 50% retracement, because I know if it's above 50, it has a better chance of working as an order block that will reverse price. Okay, but which one would you take? That's very difficult. In my case, I trade all of them up to a number, a specific fixed number, as long as they're above 50% retracement. Well, that's one thing. The other thing is, if I don't have a quasi like I do in this case, the other thing is I look at the freshness, right? This is just something I thought up. I don't know if other people are doing this. Other traders, I would assume so. But what I know, what I've seen is that depending of how fresh, and by fresh I mean how many bars have been printed since the creation of that order block, depending on how many bars have been created, uh, um, the likelihood of the order block to work changes, right? So if it has a lot of order blocks, if there has passed a lot of time, price will have a different reaction to it than if it's only one, two, or four, or six, right? So that's another guidance you can use. You can go through your data to look for what is for your type of trading and your type of TP and stop loss, what works best for you. And it's something personal to your strategy. So it doesn't have to be the same for everyone. In my case, a mid single digit number of bars. So, for example, this monthly, I will at this moment, right at this move up, it is still fresh for me. So I'm able to take that on that monthly time frame. But for example, this one, based only on the freshness of the order block, there's a lot of bars that have been already printed, so it's not fresh anymore. So that's another way to select and prioritize your order blocks, which one to trade, which ones not to trade, right? And if you want to be very selective, you could trade the last one, right? Because that from the whole structure, if you're, let's say you're are trading a quasi or some other reversal pattern, the last one is the, if it hasn't, if it's going to reverse from a earlier order block, then that's fine. You will miss the trade, but you will not lose, right? But if it is going to reverse, then the last order block is the only chance where it likely to be reversing. So it has a better win rate, but it's more, because it's more selective, it's going to give you less signals. So the last one is the one that is most selective, but in return, it's much more likely to work. All right, we have two questions more. Are order blocks valid when markets is in a consolidation? How do we trade order blocks in a raging market? It's the same way. Order blocks are order blocks are order blocks. It doesn't matter if you are trending or if you're ranging in a consolidation. They have the same. It has the same use or the same significance. It means that that area, whether that predefined range, it is an area where market will react, will bounce off from it, either from above or for below, right? So it doesn't make a difference. The only difference is that your TP, if you're in a range, your TP should be within that range, right? Doesn't make sense to be, targeting something, predicting a breakout if it hasn't happened yet, right? So I would suggest to have your TP within that consolidation and not outside of it. The third question is, can a supply order block transform into a demand order block, similar to how resistance becomes support? Yes, it works the same way. Uh, Order blocks, when they're broken, you will tend to see that price comes from the other side. So if it's a bullish order block and gets broken, price will tend to come back to that order, that broken, invalidated order block, and it will be some kind of a resistance, some supply zone from where price can continue lower. It doesn't happen all the time, but it does happen often. Often enough for one to build a strategy around it. And the last question is, how do we distinguish fake order blocks or traps in order to increase our win rate? I'm not familiar with that term, fake order blocks or traps, and I wouldn't have a good, since I don't know exactly what you're meaning. I don't have, because I don't know any fake order blocks. To me, they're all order blocks, and price will react to them. The only thing is, once certains are more likely to work than others. And I use freshness, and I use the retracement, how far price is retracing back to that structure. Those are the ways that I identify the order blocks that are more likely to work, right? The other way to increase your win rate is to have alignment. I haven't said anything about alignment here, but if you are on the, let's say on the hourly, if the order block, if the H4 order block is also the, I'm sorry, if the H1 is within an H4, for example, you'll have two order blocks telling you that this is a good place where price will react. By having alignment, you will increase your win rate. And that's the way I do it. I use alignment all the time. I need alignment to keep my win rate high enough to be profitable. Those are the things that I can help you. I thank you, MCD, for your question, and keep them coming. Everyone in the community, keep them coming, those questions, because this is how we learn, and others will learn from our questions. And if I don't know the answer, I'm sure Jonatan will know it.
Yeah, that's great, man. Thanks for that breakdown. So since my camera is out of focus, let me just fix that. I can restart the camera. I'm going to show you the gold trade that I have. I've just sold 50. I've just exited 50% of the position here at the local highs, because there is a big possibility that we had that push up and then it's going to get rejected at that high. And so I've worked on, and thank you, by the way, Fernando, for pointing that out with the camera. So I have gone through my journal. I'm not ready to do the full journal review. I'm going to do that this weekend. So I'm going to go through the whole of April and the whole of April and all of May, every trade. I'm going to go through it and try to figure out if having an active trade management style would have been better or not. But actually, what I'm doing now is I'm going into a more active approach today, because I had two major losses. Not major losses, but I think I gave back like 8 or 9 R in open profit, which to me, 8 or 9 R, that's that's a couple of months of profits, so if those would have hit TP, that's equivalent to 1 or 2 profitable months for me. So that saying where 80% of our profits come from 20% of our trading. Well, those 2 trades should have been that 20%, and I gave it all back. I went from being up 9R to closing one at break even, and one was actually a loss. So yeah, so Elias says here trade management is a must. It's really not. Like it all depends on your trading style. You can be very profitable with no trade management. So saying that trade management is a must it's not the same as risk management. Like risk management, that's a must. You can't be profitable without risk management, but you can be profitable
but
without
perhaps
trade management.
Perhaps Elias means the broader, the bigger idea, like set and forget is also trade management.
Yeah, I guess it is. It's definitely a trade. It's
no
but
management of the trade.
I don't think that's what he.
Oh, okay. I don't know.
Well, let us know if that's what you mean. Normally what I would say is set and forget is not a trade management technique. It's the absence of trade management techniques. I think set and forget is a very good foundation if you are struggling with trade management. Like so for me, one of my biggest struggles in trading is trade management, because I'm quite impulsive. My impulse control is not the best. So most of my trade management is based on impulsive decisions. So what I did was, okay, so I went back and said, if I start from the approach of set and forget, then I can slowly but surely, improve the set and forget approach. So if you begin, at nothing, then you can start adding things to that process. And that's the idea now. So to be able to have a clean data set, I had to do no trade management to be able to see, okay, so this is my data set without trade management. And now let's go through every trade and see what the results would have been with different types of trade management. So what I'm going to test is what happens if every trade I've taken, what happens if I exit every trade at only half an hour? And then what happens if I exit every trade at 1 hour? Or what happens if I move stop loss to break even at 1 hour, take 50% profit, and let the rest run? So I'm going to try all of this and see what risk management approach is actually working. But the thing is, this is very time consuming. Imagine that I'm probably going to go through somewhere around 50 or 60 trades. And not only am I going to go through 50 or 60 trades, but I'm going to do different trade management techniques for each trades. So it's going to be probably 250 tests. And the idea is that I want that done before I continue to trade. So hopefully I'm able to do that over the weekend. If I start on Friday, I'll do on Saturday and Sunday as well. And hopefully I got the time to be able to like go through that, because I think that's what creates good trading behavior, and that's what makes us profitable. Do those sorts of testing periods.
For sure. I think it's very valuable what you just mentioned, that exercise of knowing what the quality or the profit potential of every signal is. That's basically what you're trying to measure, the maximum. Well, not exactly that, but it is a what you're trying to see is which TP placement had what results would have each had on your result, and what outcome it would have on your result on your equity curve. And that is very crucial. I think it's very essential that we have the set and forget, even if you don't trade it, to record it, right? What if I just left it, hit TP or stop loss, even if you closed it half hour, 1 hour, 2 hour, but the TP was 3 hour, let's say, record your, if you have left it open for set and forget, and look back last week, last month. Did you trade management produce better results than your set and forget, or worse, right? If it's worse, then the data is telling you you should manage less or stop completely, perhaps. Just let it go either to stop loss and TP, right? So if you do that constantly, you're constantly monitoring if the management is effective, if it is the best thing to do, because it may have been on one data set, which is perhaps, I don't know, a couple of months ago, but is it still the case? And you don't know, these things tend to fluctuate in time, and if you don't measure them, how do you know that you're taking your trade management, whether that be set and forget or actually managing the risk as the trade was open? How do you know it's the best thing? You don't, unless you measure it. So it's what you're saying, Jonathan, is, I think, should be a common practice for all traders.
Yeah.
Checking your results and checking if your decisions and your trade plan is still the best one for your equity
Yeah,
curve.
there's some very good comments here. So first, I wanna ask Andrea. So this is interesting. On one account, I take partials, trading stops, etc. And on the second account, I just put 2R TP and never look back. I would love to hear more about that. I would love to hear about the differences between these two accounts, and also 1,000 subscribers to 40K. We're going to do a celebration at 40K. So make sure that you subscribe to the channel at 40K. We're going to do some sort of celebration, probably something nice for you guys. Yeah, this one, I was just gonna pull that up. This is very important. So and this is, I have to figure out, I have to figure out a structure here. So, when I'm doing the testing and when I'm going through the journal, what is going to be my actual trade management approach and try to be objective. Now, the thing is, I have a very, like, in my discretionary way of thinking when I'm trading, I have a very specific way of trading. Like, I think I can act discretionary in trade management while also being objective, if that makes sense, because I have very clear ideas of what I want to see and what I don't want to see and I know, as long as I'm not impulsive, which in back testing you can't really be impulsive, But as long as I take my time and I do trade management from a clear mindset, I should be good doing it discretionary. I just have to make sure that when I move that process over to live trading, I have a system of removing the impulsiveness,
Yeah, I agree. It's in making things more objective, rule based, even if it's discretionary, because it may sound contradictory, but it does not necessarily need to be contradictory. You can have a rule, even though the rule is slightly different all the time. In that case, the discretion is in the differences which you still assess as being that trade condition or that sign that you need to see before you pull the trigger. So it is bringing rules into your trade management always is good for your consistency, and I can see that. For example, yesterday you said something about you saw your TP being front run, and you did not um, pull the trade because you try to you focused on the TP, set and forget, but you have seen that so many times when it's getting front run that the possibilities of your TP getting hit is is lower. So
Yeah.
that's something discretionary, but which price action constitutes a front running, right? That's where
Yeah.
you need to have some rule. Okay, is this a rule? Is this a front running or not? Right, and that there comes the discretion. But if you have some kind of rules, okay, it needs to do this and that. If it does that, I will consider that a front run, and I will close a trade because that's a rule, for example. If you bring more of those rules into anyone, that not only, I mean, this applies to anyone. The more rules you have, the more objective those rules are, and the more rules you have, the easier it becomes, because you only have to follow that rule, right? It doesn't depend
Yeah.
on you anymore solely.
And I think also the idea, and I know a lot of you watching here, a lot of in the comments, you've been following the live trading rooms consistently, and you've been following my journey and my process of like improving my trading. And I've been going through this process of like, yeah, okay, I'm not good at trade management, so let's start at the beginning. Let's just go, let's just go with the set and forget, and see how that works out. Now, what I've noticed with this set and forget approach, and especially now that I've been very, very disciplined in following the set and forget, is it has opened a lot of doors and a lot of ideas on how to deal with trade management. So now that I'm going to be more active with trade management, the idea of set and forget and the practice of doing so have made me realize lots of important stuff, actually. So one thing being that I I shouldn't be too afraid of changing a plan if new information is available. So, for example, on gold here, I entered gold. This level was not there when I entered gold. So my idea was based on I'm just going to take it, I'm going to take it up here. Okay. That's the plan. Boom, entering. Now I'm in the trade and I'm looking at price action. I'm thinking, this target is a bit too high. Where's the actual local FTA? Well, the actual local FTA is here. Okay, so when price hits that level, I'm going to sell 50% because that's the local FTA. And what happens at local FTA? Well, chances are it's going to move lower. Okay? So I looked at the charts again and I said, well, we got a level right here. Okay, so what happens if price gets above this level? If price gets above this level, I'll move my stops to entry. So now I'm actively changing the trading plan while being in the trade by seeing more FTA. The FTA is first trouble area for those who don't know. So, but the idea of using a strict set and forget approach have taught me to take very few decisions. Be very mindful of the decisions you take and take as few decisions as possible.
Yep, yep. I agree to that a lot. There's a comment actually from Henry, our good friend Henry, about what I was talking about, the order blocks. Let me bring that up. Price tend Henry is commenting. Price tends to react harshly to order blocks up to a point, as it's an area where institutions have placed many orders that need to be filled several times, as one mitigation was not enough to fill that. And that brings me to something that I forgot to mention. Instead, and not only the freshness of the order block is necessary to gauge its effectiveness in the future, but also the retracement, the where it is in a structure, right? If it's halfway the retracement, or if it's at an extreme, right? At the extreme, it will work better. And the other thing that I forgot to mention is that how many touches it has had since its creation, right? How many tests? Because with every test, it becomes weaker, right? Not stronger, weaker, right? Some many traders at the beginning, they would think, okay, it held one time, it held second time, the third time, sure, it's going to hold the fourth time. That's the other way around. The more times it comes back to that order block, the more orders the more orders have been already filled, and the less orders they are still there to protect that order block, right? So I only trade the first one, but it does not mean that that's the only profitable attempt. You can trade the second one, the third one. It's okay, but you need to have measure that it works for your strategy, as I always say, because I can say things that work for me, but since we're all different and your rules reflect that difference in personality and strategy, you need to make sure that it also applies to you. So there's not a one size fits all for you have to trade this, the only first two, or only the first, or only the third. You have to check it. But in my experience, and actually not only my experience, this is a concept widely shared. The more touches it has had, the weaker it becomes. So the less you want to be trading those. So thank you, Henry, for that comment.
Yeah, thank you, everyone commenting and asking your questions. It's very it's very helpful for us as well to and to be able to help you guys. It's very I love being able to help you guys. So whatever questions you have, just uh, let us hear it. So on the point of Victor wants to like buy or sell the first retest or the first test of an order block. So the same thing goes for any type of trading level, unless you're a breakout trader. If you're a breakout trader, then this applies, but kind of like applies in the reverse. But imagine that you have a level right here, and you have 100 sellers. It's going to be a nice example here. Okay, here. You get 100 sellers. Okay, so for every test, 25 sellers are getting absorbed. So imagine that you have a test. Okay, one test, you now have 25 people selling. Okay, 25 people selling at resistance, which means you have 75 people left. Okay, as the price goes down, those 25 sellers are happy. Boom, comes back up. You now have 50 sellers because on every test, you have 25 people being absorbed. And then again, 25. And then again, 25 people gets absorbed. You have 0 sellers. There's 0 sellers left. So guess what happens on the next retest? Well, you're going to get a breakout. And then what happens with this level? The 100 sellers now become 100 buyers. This is a very simplified way of looking at it, but it's a simple way of understanding why you want to get in on the first retest. Why do you want to get in on the first retest? Because there's more sellers and buyers on the first retest. The first retest has the highest probability of a bounce, because the more this level gets tested, the more buyers are getting absorbed. So you can also look at it this way. You have 75.
One question perhaps that may help. Why, perhaps someone in the audience has this question, why, if you had 100 sellers first and when it breaks out, why do you have 100 buyers? Why do they become buyers?
Yeah, I guess so. You have the 100 sellers, and they have to. I mean, that they're going to be wrong on their position somewhere, right? That they have to be wrong. So everyone who's sold this level, they're wrong. Correct. Above this level. So now Correct. They're wrong. They have to cover their positions, and exactly. To cover their positions, they have to give their positions to someone else. Someone else have to be buying their positions. That's basically how trading works, exactly.
Right? They close their sell, which is in essence a buy, right? It's if you're shorting something and you have to close that position, that means you have to buy it back to cover it, and so you're at that time you become a buyer. So once your stop loss or simply you're closing the position or your stop loss get hit, your trade, which is actually a selling pressure, you become a buyer. So you have to do the opposite of what you wanted to do, and that's why you go from all those sellers become buyers, plus those that are pushing the price higher. So that's how you get breakouts. Great stuff, man.
Yeah. No, I think it's oversimplified way of looking at it, but it doesn't really have to be complicated to understand the importance of the first retest. And also, I think when you look at a trend, it's just look at a trend like this. I mean, this is a great looking trend, and every bounce here is a new higher low, and what creates a good looking trend is when the first retest or the first bounce or the first, so the first bounce or the first retest is the only low. I mean, this is not a good looking trend. I don't like this. This is not a trend that, you know, when price is coming back down, I'm like, well, now it doesn't look like a perfect trend. Now it looks like a possible range. It looks like a possible M structure, a top formation. So it's also about the um, the visuals of the trend. Yeah, we can go into the details of this. Of it's not the best type of explanation. This is not exactly how markets work, but we don't have to understand exactly how the markets work to be good traders. We only have to be able to identify patterns that are repeatable in the market. Okay, so we have a good one here. What advice have you got for avoiding fake outs? Yeah, so this is a good one. So this is why I always look for rounded rounded retests. So first, if you have so we get one test right here, and then another test, and then you have a breakout. Now, let's say that this is a 4-hour candle closing, and then the next candle is going to close below. Now that's obviously a fake out. So the way I look at breakouts is, I first of all want a candle that opens below the level and closes above the level. So I want a clean break. Opens below the level, closes above the level, and then I want another open and close. So if it's the 4-hour, I want one 4-hour candle closing above, and then a full candle opening and closing above the level. And preferably, I want to see multiple candles opening and closing above the level before hitting the level. So you have a clean breakout and a rounded retest. And the idea of a rounded retest kind of goes back to what we talked about before. So imagine if this level that we thought had 100 sellers actually have 125 sellers. Okay. But that extra 25 sellers is just, it's going to take it down here. They sell up here and take it back down. The thing is, if you give the market enough time, eventually the market will accept this level as support. Usually what you'll see, a fake out is immediate, right? So you see a fake out being like a breakout and then immediately gets bought up by the extra sellers. But if you have enough time and space between the break and the retest, chances are that you now have low time frame traders and high time frame traders looking at this level as a SR flip, or a support and resistance flip, which means the resistance now turns into support. So time is important when it comes to determining fake outs, is what I would say. Hopefully that makes sense.
Yeah, that's the same concept of freshness in an order block. It's the time component that helps you identify which ones have the better probability. So time component, how extended the market are at that moment. So those are the component of not only order blocks, but as you're saying, also other supply and demand structures. Order blocks being one of them.
Yeah, interestingly, Philip says that today DU did exactly what that ICT guy showed yesterday. So yeah, we had Yanis on yesterday. Great session, by the way. Really good session. If you haven't watched that, I would definitely recommend checking that one out. And yeah, so I think I do have a sessions on here.
I can
sure.
show it.
I think this is the Asian session right here. The yellow right here. Yes, it's between 2 my time and so Asian session ends when the London Open opens, right?
There's a little overlap, but yes.
Yeah, around the same time. So so you got the highs and the lows, and Yanis explained something like you get a deviation below, and then you have like a move like this, and then it continues higher.
Yeah.
And again, this is exactly what happens. It's very interesting that he covered that yesterday. And now this is exactly the thing that happens. Very, very interesting. I'm starting to think that the Asian range definitely has an edge. Yeah, there's definitely an edge here.
Did you, by the way, did you do the exercise Yannis suggests you would do? The changing of person, right? Looking at yourself when you start your day, the second person perspective, or the third person perspective, the one outside the house or the room.
Yeah, so I did this, well, not that, but I did this morning. I tried to do the anchoring where I
Okay.
tried to remember. I tried to remember a time where I was in a good flow state of mind, and when I kind of like when I reached that point where I felt like this is the mindset that I want to have, I pinched my. So I did yesterday. We talked about like pinching my like middle finger and um, well, in the index finger and thumb. So I did it on
Mhm.
my left hand yesterday, but then this morning I kind of like did it on both hands at the same time. Because that kind of feels like it's kind of like you're entering that zen state. You kind of like meditating, and
Mhm.
so I did that. I practiced that, and I'm gonna keep on doing that every day. I think it's actually quite powerful stuff, actually.
Mhm.
So we'll see. Maybe in a couple of weeks I'll be transcending the matrix.
Someone is asking if COVID in the house. No, it's not in the house. It's in the garden right now.
Yeah. Yeah. So yeah, yesterday's live stream was definitely very interesting. I very much enjoyed that one. I'm gonna try having Yanis on more often. We're gonna be doing like trying, we're gonna do that NLP journey where I try to like meditate on this every day, and we'll see if it has any good results. By the way, guys, the we're gonna do the giveaway as normal today. Alex is sick. He's not able to get on live stream today, but I'm actually gonna send out the giveaway form for you guys right now. So it's gonna be the same link as. It's gonna be the same link as yesterday, but before I go through that, I'm gonna run a quick video, show you the event that we got going on with Traded Pool. Now I must warn you, the volume on this clip is very loud. Make sure that you turn the volume down. All right. All right, so this is the deep dive trading that we have over at Trade the Pool. This is an event that they are running. It's an 8-hour free live stream event with massive prizes. The prize pool is, I believe, up to 1.5 million. So lots of nice prizes in there. And as you can see, we have companies like TrendSpider and TradeSync and all these cool um, um, trading companies that you can learn from. We have 8 expert traders that are coming and sharing their knowledge. All you have to do is go to the link in the description. I'm also going to send out this link in the comment right now as well. So you can go to that page right there, sign up with your name and email. And we're not going to do a live stream next Monday because we are all going to be watching this event right here, and you should be doing so as well. So make sure that you Yeah, you got some really cool events going on right here. Yeah, definitely going to be watching that. It's not only for equities trader, it's definitely for forex traders as well. I'm going to be pinning the uh, the link to the giveaway as well. So let me just give me a second here. I'm going to get that all set up for you guys. So we have the
I
giveaway.
banned someone by accident. I'm sorry, data accord. It was a misclick. Is there any way we can undo that?
Um,
Yikes. I'm sorry, data accord. It wasn't meant. Don't take it personal. I was looking for the for the pin option, and
okay.
I clicked accidentally. I'm sorry.
No worries. Yeah, okay, so I got the comment pinned. It's the same link as yesterday, and it's the same code as well. So it's NLP. So you go into the link, and then you type in NLP, and then I'm gonna let Alex draw a couple of winners when we get closer to the end. And oh, you can't re-enter that link, can you? Oh man. Let me know if there's any problems with using yesterday's link. Go into the link and try to. Okay, that's not where we can't re-enter. Okay, right.
In the meantime, perhaps I can show some EU price action as you're, figure that out, how to change the code or whatever that needs to be done.
Yeah.
Let me check here what we have. I can show my screen. All right, so that is my screen. What I see is this. If we start from all the way from the higher time frames, of course we are coming back into this monthly order block, right? I know I'm a day trader, but I still look at these higher time frames because they are relevant. We are coming back into this bearish structure. It's the second time around. The first time was technically already happened, so it's the second test, something we talked about recently in this session. The other thing is we have on EU, we are above us. We have two entry order blocks on the weekly, right? We're not there yet, so that doesn't help us into getting a trade. But if we go to the lower time frames, we also can find a daily order block based on a daily quantity that we are now currently testing, right? That whole this area, it's quite wide, so it doesn't help us to get an entry, but it is there. If it does signal in the future, in the coming days, be on the watch out for that move that may be in that direction. If we go to the 4 hourly, what do we see? We have, even though we are getting on the higher time frame in this supply area on the daily, locally or on the lower time frame, the H4, we are very bullish, right? We are in a bullish. We are still in a very bullish market structure that we cannot avoid, right? It's making higher highs and higher lows, and it's the easy path until it shows us the opposite, is for it to continue doing this, right? So even though we are getting into a supply area, it is difficult to say where in this supply area price will reverse. Even if it will reverse, there's no way to know the future. So it has a good chance of reversing at this place, but it may not, right? So we need to trade what we see, right? Not what we want to see. So the market structure tells us that it's the easier way is for it to continue this trend, and that would the confirmation would be, of course, when it breaks this high, if for it to continue. That's the continuation of that trend. So I do see this. So if you see this, you want to be long, right? The 4 hourly market structure is telling us that we are currently in a If you look at this, we do have a daily order block here. It has a pin, right? So it doesn't seem to be holding price that well, but it hasn't invalidated this structure yet. So we are seeing that supply zone there. But as you can see, what does the H4 do when we are getting into this supply zone, right? If it is going to stop price, right? Let me mark it with this tool. This is the supply zone on the daily, right? If it is going to stop price and reverse price eventually, should it be forming bearish structures or bullish structures, right? If it's going to reverse and it's coming from below, it should be making bearish structures if it is going to reverse and go that way. Instead, what is it doing? It's forming bullish structures, right? That already tells you that if it's going to reverse, it's not doing it right now. It might do it later, but it's not doing it right now. It's not going to reverse at
Sorry,
all.
sorry, Victor.
Go ahead.
I just have to mention about the giveaway. So the thing
Okay.
is, Alex is the only one right now that has access to creating giveaway links, but he's sick, so he's ill, and he's not able to create a new link for us. So we'll have to simply go with what we have. And right now we have the link from yesterday. So everyone that's in yesterday's giveaway, if you entered for that one, you're in the draw for today as well. If you didn't enter yesterday, you can enter today, and we'll do a draw on yesterday's. Yes, this means that if you entered yesterday and you're not here today, you will unfortunately also be in the draw. But I think this is a better solution than not having a giveaway. So to make sure that we still had the giveaway and we're still giving you the opportunity to get accounts, we'll just do it this way. So it's not perfect, but at least we'll get
We'll have a
we'll
giveaway.
get the giveaway going. All right, continue, Victor.
Yeah. So if you think about it, if the market is going to reverse here because we have that daily bearish structure, it needs to start that reversal on the lower time frames, right? That's the fractal nature of the market. Before it shows it on the higher time frames, the H4, etc., it will show it on the lower time frame. The same goes for it to reverse on the daily. It will start showing it, let's say, on the H4 before, but it isn't doing that currently, right? So it's forming bullish order blocks. That tells me that it's not ready yet to reverse. Will it even reverse? I don't know. But if it is getting into the area it's supposed to reverse and it's showing bullishness still, then I'm gonna, as the more it does that, form those bullish structures, the more I think that supply zone, the higher time frame supply zone, will not be able to reverse price. So I'm that is a argument for me to look for longs, even though we are in a supply zone on the daily, right? Because of the market structure as I just showed. So the bear market structure, right? The higher highs we have been having the last couple of days. So if we do that, we have a
Can we just
H4
take a
order block.
moment and appreciate
Go ahead.
gold?
Okay.
It's going absolutely nuts.
Isn't it good
That's
when you have those trades? That's what I mean. It just keeps on going in your way, and
yeah.
it's. I mean, this is
And this is
trading at
the
its best, right?
and of course, I should have kept this open. You know what I mean? Like, I shouldn't have sold 50% like this. The time when I should have used the set and forget, of course, that's when I'm not using it. And these are the things that makes me crazy. Okay, this makes me crazy. This is why trading is so frustrating. It's like when you do the right things, it's like you do the right things, and then it's like that from time to time you're gonna get that big winner, and it's like you screw that up, and it's just much smaller. But I still think better safe than sorry, right?
Yes, profit is profit is profit. So you can't argue with that, even though it's not the whole pie. And maybe you shouldn't aim to get the whole pie, right? Just get a
Mm.
slice every day, and that will be enough. There's plenty of opportunities, tomorrow, next week. So Yeah.
Murphy's law. I think Murphy's law that sums it up perfectly.
You want to see
It's good.
something
It's
specific on gold? You want to
no. I
say
just
or
wanted to. I just wanted to interrupt you and say that just take a moment of appreciation for the gold trade. Okay,
we are
continue, man.
currently in we're currently reaching some kind of supply zone. So this is only
Yeah.
on the 1 hour, and we're coming from a H4 order block, a fresh one. So this could break easily and continue. But then again, I see on the H4 as well, there is a order block. So this is I don't know where you took your profit, but this is a valid FTA to me as well, even though I don't trade like you do, and my FTAs are different. This to me is the first stop. So yeah, it makes a lot of sense. On the H1 and H4, I do see supply. So I want to be out at least a portion of it, uh, at the first area. So it makes a lot of sense. You're exiting now because why do you think you shouldn't have closed? Because of this whole movement it made, and you think it hasn't retraced that much yet. You think
So
that
I've
this move,
only. I mean, I've only
this is
closed 50% of
okay.
the position, and I'm waiting. I'm waiting a while before my move stops to entry. But I have my TP at what is
Something
it,
like this.
2000, so 2376 is where I have my TP.
76. Okay. All right. So before the next order block that I see there. Okay. That makes sense.
Yeah.
It makes a lot of sense. I mean, actually, if you now that I heard that you only closed partial, so you closed half of it, it makes complete sense that you took the this is one portion of your trade, and the other one goes for the other structure, which makes a little less than that, something like that. Makes perfect sense to me, man. Don't feel bad about it. Perfect.
All right.
I
So
think it's well done.
okay.
If I continue with the EU, or do you have something to say, Jonathan?
Yeah,
No, I will
I'm
continue
riding with
with.
Alex.
Oh,
Yeah,
no
I'm
problem. I
riding with
will.
Alex, and Alex is not doing. Alex is not doing great, so
Oh, okay.
he's actually not going to be able to do the draw today. So I can't really force him to. It's probably in bed, fever. So that sucks. So he's not going to be able to. He's not going to be able to do the draw today. But we will use today's link. We will use today's link, and we'll do a draw of it tomorrow. So guys, we're going to be going this live stream for the next 30 minutes. So again, the number of likes that we give away, the number of accounts, obviously we give away is based on the likes. So make sure that you like the video. If you haven't liked the video already, do that. Yeah. So Alex is not with us today. He's in bed with a fever, probably not doing great. So we'll.
Yeah, I would invite everyone to leave your best wishes in the chat, and Alex perhaps will have a chance look at them maybe today in bed while sick and feel a little bit better.
Yep. We'll do that tomorrow. See if he feels better tomorrow. We'll also see if we can get a better setup where we'll be able to get this done without in bed trading Pepe. Yeah, I'm actually gonna screenshot that Henry. I'm gonna send it in to him.
Yes. So the EU, let's go back to EU. So even though that we expect on the daily time frame some kind of possible rejection here, which may still happen on the lower time frames, we don't see any indication yet. The market isn't telling us this is an H4. Let me get that. That's an H4. And the market isn't telling us yet that it's going to reverse. So as I said, we don't trade what we want to trade or we want to see. What we actually see in the market, those actual closes and structures that the market is showing us, right? So the market is forming H4 bullish structures, so that if it does that, I'm going to assume it wants to continue, even though on the higher time frame, as I said, this is a supply zone. So that is a trade that I'm looking into right now. As we speak, we have an H4, right? We have this fresh order block that was created half an hour ago. On the H2, we also have another order block. We have alignment, and so then I go to the lower time frames and to see if I can catch the reversal, right? Do we see a quasi, right? Lower highs, right, and lower lows. Are these lower highs? That's the question we need to ask ourselves. If you look at that, these are lower highs. So yes, technically it is a lower high. There is one issue I have with this trade. I will show you guys, but this, you do have a quasi, you have a downtrend, even though it's barely a downtrend, but it is a downtrend. It looks more like consolidation, but it is lower highs, lower lows, and you have that break. So you could be looking for the retracement into those order blocks that will push price higher. The only thing I have with this is, the only issue I have with this is the ATR. The ATR of today is actually, it's not that bad, but is currently the range is at 39 and euro, and the ATR ranges around, let me see, we have a reading, it ranges between around 45, 46. So we only have about typically we only have about 6 pips. If this is going to expand on the upside, it's only going to be until, on average, until this area. Well, this is still tradable if it gives you a signal to go long from these areas, right? If you have a tight stop, or even if you put it here, that would be something that I could be trading, right? It's not that sexy, it's not that 1 to 8, but it's still profitable if everything falls into its right place. So that's something that I'm looking for. So I would go into the lower time frames and try to catch this move if it is going to show us, right? Because we have the H4, we have the H2. I didn't check if we have the H1 as well. Let me check that. This is a live trading, guys. So this is how I trade every day. This is how I know to trade. So there's nothing on the H1. But there is H2 and H4. So I expect I'm gonna take these off. I expect, because of those order blocks, I'm going to expect it is on the H2. So I'm expect a move, a possible reversal from this area, right? This area in yellow. That's my playing field. If I see on the lower time frame a reversal pattern here, let's say something like this, right? Something like that. It's not a good one. Actually, let me do that again. It needs to have
I love that. Price goes backwards. Let's do a little circle up
time
here.
Machine.
Yeah.
It's doing a time machine.
Yeah.
No, but if it has let's say it is in a downtrend, right? It needs to be in a downtrend, and then has a low, and then breaks one high, right? The break of structure, the neckline, and comes back. Then I want to be in that trade, right? And that needs to happen at a relevant place, right? So you need everything to align up the H4, H2, and on the lower time frames, on the 1 minute, 3 minute, 5 minutes, whatever you may like to trade on. If it does that, and it can do another reversal pattern. It doesn't have to be a quasi. It can be a double bottom. It can be a wedge, right? It doesn't matter. But if it is a reversal pattern that you are, you know how to trade it, you have enough data on it. If it does that, then you want to be, entering on that right shoulder, and you target something, what I said, something about 6 pips above this high, or you could look at other stuff as well, something like pivot points, or The pivot is a bit higher. It's at 95. So that's won't help you. The TP could be something. It could be the TP could be just that, just the last high. That could already be something a decent area. It's not a lot, as I said. If you get something, it's going to be something like 15 pips, 16 pips. But you can also trade for, let's say, something like this, which is the ATR of today, right? And that will give you about 15 pips or 20, depending on where you enter, of course, right? But don't, first of all, don't take this because I'm showing this setup. Build your case, use your strategy, your way, your own argument, make it your own. But this is something that I'm looking for, I'm looking at. And if it doesn't turn around, obviously I have nothing to do. If it just keeps breaking down and it breaks it, then it tells me that these structures are not the ones that will turn price around. That's the only thing that I've got going for today, guys. So yeah, we
Could you
can't
tell me
force the
about
market to do. Go ahead.
so alignment? So first of all, guys, I know we're getting a lot of comments on the giveaway link, but it's the link in the pinned comment. You use the same code, and we go with that link. Now I've explained it many times. I have the comment up here, and I'm not gonna spending more time explaining the giveaway, but use the link in the pinned comment. It's not going to be any problems. Victor, can you tell me, you used the word alignment, so
Yes,
what does that mean? Can you tell me a little bit about that?
sure. To me, alignment is this, right? It is when you have different time frames telling you have the same bias, right? And my bias is formed based on order blocks and based on quasi. If I have a fresh order block that is formed, let's say this is my bias on the H4 now is long because it formed that bullish structure, right? So I want to be my H4 bias is long, and I wait for price to come back as it formed the order block and made that engulfing, and it comes back to retest this area. So that's the area I want to be entering. But the fact that it is a bullish structure makes me want to be long, right? So that's one thing, and that's only on the H4. But when you have the same direction, the multiple time frames telling you the same direction, to me that's alignment because they are aligned saying the same, right? They are, and you need alignment. There are certain rules I use, uh, how I use alignment, and what do I do with them. So if I have, currently we don't have the daily aligned, right? Because the daily is actually is a bearish order block, right? So you need to know how to navigate the different time frames telling you different things, right? But in general, I use, I know, for example, in this case, I don't have daily alignment. So whatever I do, I'm not going to use it for the daily time frame because it doesn't make sense. But on the 4 hourly, it's still, as long as this order block is still valid, I will be using something that makes sense on the H4, right? And I only, my trade plan is based on alignment. So I need the H4 and the H2 or the H1 aligned in the same direction, having the same bias. And then I go to the minutes and I use a reversal pattern that is also aligned with those hourly time frames. So I will use a bullish reversal pattern, right? Well, price is coming down and reverses to go back up in the same direction as the H1, H2, H4. And then when I have all those time frames aligned, I can have my 1 minute entries and actually target an H2 or an H4 structure. But I can only do that if I have alignment on all those time frames. But it also, I like it as well. It helps me with my discipline as well, because at other times that I don't have that alignment, I don't have to do anything. I only come into action when I have that alignment. So it makes me selective, and that's good for my psychology, my discipline, and things like that. So that's one thing. There's another comment that someone asked, AP asked, how do you confirm that an OB is valid and strong? Well, Um, Good question. It's $1 million question. It is those things that I mentioned, the freshness of the order block, right? So how long has passed, how many bars have been created since the order block itself was created. That's one thing. How many tests it has had since its creation. The more tests, the weaker it gets. And the other one that I mentioned was how is it at the end of a move? Say, let's say you are in a day and you have an ATR that tells you that the asset can move 50 pips in a day. Is the order block at 25, right? Because then it's less likely. If it is at 50, and indicating a possible reversal at 50 makes sense on the ATR as well. So it depends on that. How long has it traveled already? So those are the things that I can share. And my confirmation, and this is perhaps what you refer to, the confirmation comes for me at the lower time frame, right? So if I have a daily order block, right, that I deem as valid, and I want to have confirmation that I can enter that, that is a quasi on the lower time frame, maybe on the H1, maybe on the 30-minute, or a H4 order block, so a slower, a smaller time frame, showing me the same, right? That reversal pattern, that could be a confirmation for my daily setup. Okay, so lower time frames. Someone else is asking if I'm going to have the usual sessions in Discord today. Yes, I will. So come, please join us for that session. You are all welcome. You only need to have an account with the 5ers and join the Discord through the link on your hub section. Let me see what else. This is a good one. How do I close part of the trade and leave the rest to continue MT4? It's the same as MT5, and it is you have to close, but don't close the trade with the X on the terminal. But I don't have a trade on yet, so maybe I can remember to do it live.
I
How
can
to
show you
close a
guys.
partial?
I'll open.
You can
If
close
I can
perhaps
open.
a micro lot.
Yeah, no, I can. I'm not gonna close it, but I'll show you how I do it, right? So this is the gold trade, and I would right click, go to modify or delete, and then you can go to market execution, and you could do, so this is a 0.3 lot, so I could do like
We can't see
0.1.
that. We can't. We're not able to
Oh,
see
you
that.
okay? So I'll do this then. Let's see.
Maybe you have to move the window inside the other window, because maybe the window you're seeing is at another screen. Maybe you
I'll
have to
do
drag
this.
that.
No, it's weird because I'm sharing the screen. I'm sharing the window, but it can't share that window. I'm gonna do this.
Okay.
I'll show you. So this is what it looks like, you know. So
Yes.
you right click and you right click and click modify or delete, and then you select market execution. And here on volume, you enter the amount that you want to partially close. And then down
Hmm.
here it says close that amount by market. You press this one right here,
The
the
yellow
the
one.
yellow one.
Yeah, and it will close 10, whatever that volume you specified, and leaving the rest open, right? So
Exactly,
that's how.
exactly. So if you have one lot open, or a 10 lot, whatever, probably not a 10 lot, but if you have a one lot open on gold and you want to close half, you type in 0.5, right?
Mhm. Yeah, that's a great question. Thank you for that, Isa Ngatia. Um, Let me see. We had another one. No, those are the questions that I spotted. So yeah, good stuff. Keep those questions coming in, because as you saw with the partial, I didn't think that that we should show that, because I just didn't think of it. But by you guys putting that question there, it made us aware that, hey, that is a great question that many people may have. And if they have, then we, by all means, we should show that, because that's how we grow as a community. And the Fiver is all about traders growth. If that's our motto in the Discord as well. If you come there, we are all focused on the growth of each one of you, me included. But yes, you. So one person asking this, Victor, what is your largest risk reward on one trade? I haven't measured it, to be honest, but I have had over 100.
Hundred
For
R.
one, yes, over 100, 1 to 100, above 100, but I haven't
That's
measured it.
insane.
I haven't measured it, and that comes at, I can only do that when I have alignment not only on the minutes, the 1 hour, the H2, the H4, but also on the daily, and you guessed it all, on the weekly. When you have all of that aligned and you can actually catch, and the market is fractal. So if you can catch that 1 minute entry and you're able to hold even a partial of a part of that trade for, convert it from an intraday trade to a swing trade, that's where you get those R. And it may seem like impossible, but it's not. They just don't come by very often. But I try to catch them as much as I can. I can show you guys one idea, right? Because, for example, if I see this, let's say I have this order block on the weekly, right? And that order block is based on this quasi, right? This is on the weekly. This is a quasi breaking of that neckline, the right shoulder, and it's forming another. It's going another time. As long as it doesn't make a higher high than this, according to my plan, I can still trade it. If I'm going to catch a trade here, right, on the lower time frames, I already have in the back of my mind that this could possibly signal me on the weekly as well, right? Even though I don't have that yet when I'm entering, but I know that it could signal at the end of the week. If I know that, I try to see if I can upgrade a trade for a weekly trade. If I'm going to upgrade this would be my target, right? So I'm going to catch the whole movement from wherever I catch it all the way down to here. And you can measure this. How much is this? This is 371. So if you have an entry with, let's say, 2 spip stop, that already is 185. 1 to 185. I don't remember what is my maximum, to be honest, but it is over 100. I think around 150, something like that. And it's only about a partial. I'm not going to hold this the whole trade, but that's the maximum. I may hold the whole trade if I have multiple trades on. Then I'll close just a few and leave the whole trade of one or two to run that far. And that's what I like about trading, the fractal nature of it, right?
Yeah.
If you know the market is fractal, make use of it, right? We all been saying that. Make use of it. Don't let it pass you by. It's an opportunity.
Yeah, it's when I hear, if I didn't know you and the way you're trading, and I've traded with you, like, and you would come to me and say like, yeah, I bagged a $100 trade, I would just say, nah, that's, lying, lying.
Yeah,
But
BS.
yeah,
Well, it's I know it's being trading is very difficult, and I wouldn't take it personally if anyone would have that opinion, because I know how difficult it is. But I mean, it is what it is, and I can show, if I get that on live, I can show you guys maybe in the coming weeks, because it doesn't happen all the time. But in the coming weeks or months, I can maybe even do it live. See, you
yeah,
guys can I can show you guys when I enter, maybe not the exact moment, but you can see the trade that I took like yesterday, and then I took a partial out of it, and I still have it open, and maybe in 3 weeks I might still have it open, and you see me close something like that, like 80, 1 to 80, or 1 to 60, something like that. And when those extreme 1 to over 100 are, they don't happen very often, but they, once in a blue moon, I do catch those.
All right.
Hopefully I
So
can show you
actually,
guys.
I think I have to go. I got my son's coming home in about just 5 minutes. Um, so little update on the parking garage. She actually got out. It took her about 45 minutes, but
Wow.
she made her way out. But my son's grandma is coming to drop him off in a couple of minutes. So I think we're gonna call it a day here. Tomorrow we have, well, unless you had something else you wanted to share.
No, I think that's it. Well, the only thing I want to say is, as you can see, let me see if I'm sharing my screen. Yes, I am. I don't enter blindly in a order block, right? The way I trade, I let the market tell me if it is going to reverse or not. If it's trying to reverse, of course, we don't know if it's going to reverse, even if it has some structures. So I will wait for it to what it does. I will try to read what it does in this area, right? That is the area of interest to me. So if it forms a structure on the lower time frame, that's when I enter. And if it doesn't do that, right, it keeps on breaking, making lower highs and lower lows, then I would just let it go and not trade it. That's the only thing I
Yeah,
wanted to share.
before I go, I just wanted to share the gold trade that I have open, and so what I'm doing now is I've already closed. I've already closed 50%. I got my stops at entry, so I've whatever happens now, I'm up one R on this trade, and for me now, this is the time to let the trade go. Like this is the time to just ignore everything. And whatever happens, I made some money on this trade, stops at entry, and now I'm just gonna let the trade run. Do its thing. Either it's gonna
How
stop me
can
out at
you?
entry, or it's gonna.
Yeah. How do you? And what helps you to? How are you able to let go of that trade? What makes what? Because when you enter it, it's kind of difficult to let go of it, right? You're seeing it, you're watching it, you're pending if it's going to up or down. What makes it
Yeah.
more
So
likely or more able for you to let go of it?
well, I think for the last about 60 days, I've been able to create a process. So I've been able to, there's it takes up to like 90 days to create a routine. But I think for me, I've been doing this set and forget approach now for about 60 days, and I feel like I'm mentally prepared, and I'm mentally in. I think I'm in like a mental routine. So what I do is I go into that state, that state of mind where it's just I accept the randomness of the market, and I accept any outcome, and then I close down the charts and I move away. And I think for me, it took about 60 days to kind of get to that level. For a lot, I think for most people, it would probably take longer if you haven't been trading for a while. But I do think that going through these 60 days of using the set and forget approach have definitely kind of changed my mindset in holding trades. And there's this, our brains where there's this uh, idea of plasticity, right? Where if you if you do the same things over and over again, your brain is going to create new pathways, right? And I think that's what I've done, because there's a huge difference in the way I'm approaching open trades in the last 2 months, like a huge difference. Yeah, neuroplasticity. That's the one. And I do believe that I've kind of changed my approach um, to that. And now, if I
Great
can,
stuff.
and if I can combine the idea of actually taking partials and then letting the rest run, I have now combined the two, you know, the best of both worlds. you know,
Yeah.
taking some profit, securing the trade, and then entering that mindset needed to just let it run.
Yeah, I agree with you that about that. By doing things more often, you know you get better at it, uh, and especially the way I do it, the way I'm able to let go of trades, is by taking partials. The single fact that I'm already in profit, and that profit nobody can take away from me because it's already in my pocket, it's already closed. And because of it, I trade high risk reward setups. My partials already put me in profit, even if the rest goes to stop loss. So that puts me in a position that I win or I win. I'm already
Yeah,
a winner. So, and that's
exactly.
psychologically, that's strong. That's a strong position to be in because
I'm also,
no, ma-
um,
no matter what, I'm a winner, and that allows me to hold on to the trade. Actually, I don't look at a trade anymore. I just let it run, and I can sleep well like a baby, no problem at all, because I'm
yeah.
already I'm a winner, and that's how I can hold trades for longer.
And I'm also gonna start using the tool FX Replay. I'm gonna go through the markets using FX Replay to test this as well, because like I see there's a lot of signs of me. I can be so much more profitable figure if I figure out the trade management, because my entries, I mean, as you can see, and you've seen this, my entries are usually very good. Like I get a very good, I have a very good sense of direction in the market. I know where to
Hmm.
enter. I know where most of the time the bounce is going to happen. So I've got that figured out. My stop loss is like my entry and stop loss is almost perfect,
Hmm.
but my take profit and trade management, that's what I had to work on.
Hmm.
Um, and to me, I think stop loss and entry, that's the most important part, and then you have to figure out what's next. And for me, that's um, is trade management. All right, guys,
I got
I
I
hear
got I got
someone's coming in the door, so I
before
kind of have
I
to.
Okay, before we go, I want to show this. This is the update on that setup. As we can see, we have to listen to what the market wants, and the market is not showing us signs of that reversal. So I didn't touch this, and it to me it's obvious that that structure that I identified as a possible reversal is not what the market wants to do. So that's how I know what to trade and what not to trade. It's the lower time frame telling me those reversal, right? I'm not going to blindly long this because I have an expectation. I let price action tell me. But that's it for me.
Okay, guys. So what we're gonna do is we're gonna be doing an extra draw tomorrow. We're not able to draw the winners today. So Alex, hopefully he feels better tomorrow, and we'll do a double draw based on today's giveaway link, and then we'll get another giveaway link set up tomorrow, and we'll make sure that we'll do a double draw for everyone tomorrow. We have 500 likes right now. We're gonna do 6. I'm going to tell Alex that we have 600 just to make sure that we compensate for the for the for this. All right. So we'll get everything tomorrow. Take care. Yeah, exactly. No giveaway now. Well, but we'll do a double giveaway tomorrow based on the link that we sent out today. And we did actually have new people signing up to the link. All right, guys. Thanks everyone for joining today. I think this was a really educational session. Very, very good session today. All right. Take care, everyone, and we'll see you guys tomorrow.
Bye bye. Red folder news coming up. Till tomorrow. Bye bye.
Bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all go into the YouTube and check